So joining me now is Chris Berlet. He's got something called mineralfunds.com that's been tracking the performance and allocation, if you will, of gold funds since 1995. Chris, I'm really fascinated by the content that you've got. Just quickly describe what you track.
So we track the managed gold funds of the world. There's a 99, sometimes 102. Some of them in recent years have closed. Some of them are new and opening. Seems to be about a 7-year cycle. But these are managed gold funds that have an investment manager making active decisions on buying and selling gold companies. So we track gold funds in every jurisdiction that there are gold funds. That's what we're doing. Yeah.
Okay.
And
so now I'm looking at your most recent report, and I'm starting off with something like asset under management, AUM. And I'm seeing names like Fidelity and Franklin and First Eagle increasing their assets under management, and somebody like BlackRock going down in the most recent report. What's going on? What are you tracking here?
Okay, so the reason there are 6 of the 100 funds that we track that report monthly. And so we keep track of what's going on with their asset allocations on a monthly basis, and they're only 1 month out of date. Then there are further 20 funds that report quarterly. These are 13F requirements. In those instances, the monthly reporters are all voluntary. That's Fidelity, 2 Van Eck funds, 2 Franklin funds, and Allspring, just about $4 billion. The other funds report semi-annually as governed by the laws of mutual funds. So what you're seeing is assets under management decreased for BlackRock because the reporting period, and that's the most recent reporting period available on the full asset allocation for that fund, you're looking at is between August and February, August of 2023 and February of 2024. The other ones, you're looking at the period between March and April of 2024. So a very different gold price cycle. And obviously, increasing gold price, increased assets under management for the funds that report monthly in the March-April timeframe, and a decreasing gold price, somewhat more volatile in the period from August 23 to February 2024, is what's reflected in the decrease in AUM for the BlackRock fund.
Okay, so when I look at some of these funds, their largest holdings are familiar names to Canadians for sure. You look at Agnico Eagle and you look at Barrick, Wheaton, Precious Metals, as well as probably Newmont wouldn't qualify as Canadian, but a good portion of the funds you're looking at are Canadian, correct?
The companies that we're looking at are Canadian, yes. 55% of the money is invested in Canada. It's raised in different jurisdictions. The biggest jurisdiction for money is the United States. The biggest mutual fund market in the world, biggest capital markets in the world. So, but the money is invested in Canada. If the money's raised in Germany, 55% on average of this money is invested in Canada. A further 15% in Australia. So Canada is the market, and between Canada and Australia, you're 70% of the world market for gold companies. Outside of that, you have U.S. listings 8%, England 5%, South Africa 5%. You've got a very small percentage in Russia, China, Mexico, Ireland. And then about 8% of the money in these funds is held in cash. So what you're talking about there is the companies that are the investee companies of the funds are 55% of that money is invested in Canada.
Okay, but here's the interesting part, and where you really add value is you track new company holdings, don't you? And do you highlight that in the report?
Absolutely. That's and that market intelligence. See, there's a longer than average hold period, and these fund managers have been through several cycles in the gold business, and their summary assessment of value is reflected in what they do with their portfolio. They purchase or divest from a company name. So when we look at 6 funds on a monthly basis, those are the most current intelligence that we see. For instance, for Van Eck. Van Eck is a great leader in this regard, I have to say, as is Franklin, as is Fidelity. They all publish on a monthly basis, and now Allspring. But we can see new names that they're adopting, and they're high quality, good investment names that have passed their due diligence. These investment companies are run by CFA charter holders, geologists, and the summary of their investment analysis is expressed in what they invest in. So the new names is of most interest, and they pick up. In this instance, we saw a couple of new names. We've seen a great track record. G2 Gold was identified early by Van Eck. Allied Gold, another one, identified early 6 months ago by Van Eck. Now both being picked up by the world's biggest gold fund. We see Snowline Gold, and in this one we see Meridian Mining, a new name for us that was picked up by Franklin. Great outcome with a project in Brazil. So when we look at what they're doing on a monthly basis, the data is only 1 month old. When we compare it to the previous portfolio and identify a new name, it gives us great intel on what are the most exciting exploration and development plays in the gold market today.
Do you track the performance of those new entries? In other words, XYZ Mining pops up on your screen. You say, hey, that's a new entry. Let's see how it does over the next 6 months.
Sure. And we track them. We identify them, and we actually look for better entry points if it's possible, because often there's a flurry of excitement around a financing. So we'll see a new company name with warrants come into a portfolio, and we know that they've taken a private placement. In some instances, the stock might trade off. So we're cognizant of the entry level, which we can see from the portfolio. It's on our watch list, and that gives us the intel that it's a high quality name. And the hold periods are longer for these types of investments. Often these managers identify with the actual company managers themselves, the chairman, in various instances, like Peter Maroney, for instance, in the case of Allied Gold, Bruce McLeod, in the case of Meridian Mining, the new name for Franklin this month. And so we are tracking the entry price of the funds, and we're looking for opportunities around that, basically.
Okay, you're tracking active managers, guys that are buying and selling all the time, as opposed to exchange traded funds that are driven off some kind of an index. Those ETFs are significantly larger, is my understanding, than active funds. Does that dilute or enhance your findings?
ETFs in aggregate are larger by assets, yes. There's over $300 billion in metal and mining ETFs, and we have $30 billion in managed gold funds. But 180 of that is gold ETFs, just gold bullion. So there are company ETFs, but it's not the outsized, the 10x. There's a lot of ETFs that hold metals, nickel, copper, and uranium. So and gold being the biggest. There's 74 gold ETFs around the world, with almost 60% of that $300 billion is gold ETFs. So there are ETFs of mining companies, and both GDXJ, junior mining companies also, and the same in silver and base metals. So the intelligence that we get is around active managers. Yes, there are opportunities around ETFs. Each of them has a little bit of a different formula on what constitutes the criteria for picking up a name into an ETF, and there might be some arbitrage around that. It's not something that we focus on. We're focusing on the decisions of active portfolio managers, and the summary of their intelligence as expressed in what they actually do with the money they're managing.
Okay, so people can get any of this information at mineralfunds.com. Do you focus only on gold, or do you do other minerals as well there?
We have, there's a much smaller group of battery metal funds, and there are a small group of silver funds. There are 6 managed silver funds in the world, and of real interest is the exploration mandate funds around the world that are relatively new. We have Commodity Discovery Fund in the Netherlands. We have Crescat Precious Metals Fund in the US, a very good one. Earth Exploration Fund out of Germany, and the Mine Discovery Fund out of Australia. Those are for those interested in the exploration part of the cycle, the new names. Those funds in particular are value add. For instance, Dr. Quentin Henning, who is with the Crescat Precious Metals Fund, is identifying some great geological plays in various jurisdictions. They're in early in some of the great discoveries. So that's and then asset allocations of the managed funds that are disclosed on a monthly basis. That's where we get the market intelligence.
Chris, a fascinating tool. Thank you very much for your time.
Thank you very much, Pat.